Yeah. So thank you very much, guys, for joining us. Most of you guys, you are very fortunate that you joined us because normally our webinars they are only for premium guys. But today we actually thought of like let us give people an introduction because actually this year we've never done any free seminar with you or webinar with you guys. So this is gonna be our first. So we really wanna welcome you. We thank you guys for coming. So what we'll do is I will see with my team. Maybe you might do 2 sessions or 1 session. It depends with them what they want because these people they paid their money for these things to happen. But I just wanted to give an insight with only one chart because remember what we normally do is we share how we analyze our markets. So we share like from the monthly time frame to the hourly time frame. At most maybe sometimes around 30 minutes to 15 minutes. So those kind of time frames we use them for entries. So like we said, we are just gonna do a case study on euro yen, euro yen. I mean Eurjpy. So what we do is we check from the monthly. So we only use 2 moving averages and the RSI. Those are the only indicators that we use. So as you can see, this is our chart. So what we do first of all, guys, when we are analyzing the market, remember what you do is you don't have an entry yet. So we get entries. It depends what type of a trader are you, but with the type of trading that we are doing, fortunately now we are compulsory, but before we were only swing traders. So our execution time frames were most probably 1 hour and H4. But now we can go down to 15 minutes and 30 minutes to accommodate those who are day traders. So we go to the monthly. So what is the main reason of going to the monthly? The main reason for going to the monthly, you have to check the trend. So where is the trend going? Can I just please take this for 2 minutes and then I'll get back to this. Sorry. Hello. Hello. Yeah, for me, sorry guys. Okay. Sorry about that. These guys, what are they doing? Okay, sorry. I was just communicating with my technical team. So now, so that's the main reason. So our strategy, guys, it's alert waves. Like I believe most of you, you know, we only use alert waves. So what do we do now? We want to check the trend, and also we want to know what kind of structure are we trading in. Is it an impulsive structure or is it a corrective structure? So that we know what are we dealing with. So sometimes you find out people will be worried like this market is not moving or what's happening, you know. It's because you maybe somewhere you don't know what really are you trading. Are you in a correction or what? So gentlemen, we are our only language here is eloquence. So eloquence is actually price action. There's nothing more that we talk about here. But we are just gonna share with you what we normally do. So now you can see that okay, there was an uptrend there, and this uptrend it was progressive. So what do I mean? It was progressive. It was actually respecting. I don't see the chart. Okay, guys, can you see the chart?
Yes.
All of you are seeing the chart, right? Hello, is everyone seeing the chart?
Yeah, we can see the chart.
Okay, but there's someone say
I can't see.
Yes, sure, we can.
okay, no, it's okay. So like I said, we are talking about this part. So as you can see, this was a progressive uptrend in a channel. Like you can see from this point to that point. So you can see the market was respecting this low, this high low, you see until it will get to the high high. Even from the other side, you can see the same thing. So that's how we get progressive markets. So this one and this level and that level. So this was a progressive. So we can consider this one as an impulsive wave, right? But how do we do that? Remember, we measure. So whatever happened before, we don't know it. So this is our X leg. This is our starting point. So this wave, the previous wave, we don't know it. So we deal with what we know. So we're starting from this X leg. We get our X leg. Okay. And then now from our X leg, what are we getting? We get 1, 2, 3, 4. This is our 4. And then we get a 5. So meaning to say this is 1, all of it. Okay. So guys, remember what we said last time? You draw your Fibonacci to that point and you check the zones. So it came in the zone. This one is in the fib zone. So it's in the fib zone. This is the point. Okay, so that's my wave 2. And then my wave 3, it was supposed to be there automatically, but it was an extension. So that's my 3. And then now I got my 3. What do I do for my 4? I just measure my 4. My 4 is in the zone, wave 4 zone. You can see we are in the zone for wave 4. So with our Fibonacci 2, gentlemen, we just customize it. So it's not much of a way. Everything is just there, so we just need to follow. And then from there, there was a breakout. So as you can see, this top, yeah, there was a breakout there. So meaning to say, that was my wave 5 progression. So now I've got my 5. This is how I got my 1, 2, 3, 4, 5. That's my 5 from that point to that point. Now I measure it again to that point. There we go. So normally I only use this is just rough sketch. I only use the line graph when I want to do my trend line. Remember, right now we are talking about the trend. You want to know where the market was going, right? So we're dealing with the trend. So now let's check from this point. I got this point. So how do I draw my trend line? First 2 points. I join the first point. This is my first point. And then that is my second point. There. That's my trend. So let me use this one as the main trend. So this one will be my main trend. So there's nothing like I only trade trend lines or what. There's nothing like that. There's no price action like that. People will say I only trade trend lines. those guys, I don't know where do they get that that strategy, but there's nothing like that. So it's a composer of a lot of things for you to get that. So remember, we've got this X leg, but now I got this trend. This is my trend. Okay, from that point I can also see that okay, there's this point and that point. The market respected that one. Okay. So it's something like that. Right now I go back to my candlesticks. So that's it. So the main trend that I wanted is this one, because that's where we actually trading. So you see that the market in 2007, it was actually rejected here, right? And then they came again to reject it in 2014. This is 2014, December 2014. And they came again 2018. They tried here, it was 2020, then 2021 to broke out. So now it's a breakout in 2021. Okay, so that's what I saw. So like I said, that's the main one that I want. So now let's deal with this part. We say that this is wave 1, right? Remember we said 1, 2, 3, 4. This is my 4. That's my 4 there. So let me just use the broken one. And then it would automatically tell me what kind of a structure is it for me. So what kind of a structure is this one? The structure is progressive, and then there's a flat toe, and then we get bottom like this one. So this is the structure that you're getting. So there's a correction, then market is out again there. So these are the textbook things. So this is what is happening here. So impulse, correction. So we have got impulse, correction, impulse, correction, impulse. Remember we spoke about it last time. For those who are our beginners in our course, we spoke about how to identify impulsive waves and correction. So I'm not going to spend more time here because to take us here is actually, this is not a lesson, it's just, we are just analyzing. So I'm not going to take much time there. So we've got my 1, and then now I want to get my 2. How do I get my 2? Remember we said we measure automatically. That's for my 2. So that's my 1, and then my 2. Okay. Let me see. There are guys who are trying to join us. They'll manage. So for my 2, I expected the market to correct in this deepest zone. Remember, like what last time what I said, they also normally come to this level, this top one level. You still remember where they come, and then we say that they'll just come and take you out, and then they go. So sometimes, or other guys, they'll say that okay, that one is now an invalid trade. But if you know what's happening, it's not an invalid trade, it's actually valid. So my 2 was valid here, it was validated there. So that's my 2. It was a bit deeper, but it's my 2. Remember, I'm still on the on the monthly time frame. So I get my 2. So let's talk about here. Now I've got this part is my 2. So what happened in this part? So I can observe there's a motive here. Let me see something. Okay, actually I'm in this trade. I think you guys, I also gave you this trade, right? I shared with you guys for free. So yeah, we are gonna come down to that level. Sorry, it's not part of the list, but I wanted to check out something. So these people, are they failing to join? What's happening? Admit all, please. Thank you. Okay. So now we get the 2. So now let's talk about what happened here. Some of you will be like, but Mr. Trump, what type of a correction or a structure which is formed here? As of me, what I can say, it's a 5-3-5 correction. But how? Okay, let's talk about the how part. This is the motive. Remember we said impulsive waves, we get 1, 3, 5, A and C. So this is the A part. So I get my motive for A. So the A, remember impulsive waves is either there are 5, which we can see, which are visible 5 waves, or it's a motive structure whereby it just goes boom at once. So when it goes at once, normally it's the volume of what you call what do you call this, fundamental part or something like that, that might have contributed the market to move in such a way. That's what drives the market to lead into a motive, but it's an impulsive wave as well. So we've got our motive, so it's part of the 5, and then the B, the 3 now is this part where you get an A, B, C to get this B. Then we get this 5. So we get this 5 from that point to that point to the finishing. So now we get this A, B, C, D, E to give us this C. So you see where I get my 535 correction. Are you guys there? Okay, let's take a commercial break, gentlemen. Any questions before I go in further? Okay, those who just joined us, welcome. We actually joined us at the right time. We're just analyzing Eurjpy. So yeah, are you guys lost, or there's something that you wanna add or remove? Okay, it seems like everyone is with me. So now I get my 1, 2. Now I'm dealing with my 3, but I know that my 3 is also a what? An impulsive wave. Remember, like we said, it can be a motive. A motive is just as straightforward, like huge volume, or it can be a regular impulsive wave whereby we get 5 waves in it, like 1, 2, 3, 4, 5 to give us a wave 1 or wave 3 or 5. So in this scenario, I'm expecting my 3 to be stronger. So meaning to say this market is still going up, way up. So now I'm now trading wave 3. Wave 3, I know it's an impulsive wave. So this one, I call it 1 of 3. But before I call it 1 of 3, is it actually observing my principles? Respecting, not observing, sorry. Let's check my principles. Okay, this is my high. Okay, and that's my low. Then the market came in this zone. So this is my zone. Remember, this is the deepest zone. So they came in the zone actually. So that's my 2 zone, which is correct in this scenario. So now I'll get my 1 of 3. So this is now 1 of 3. Remember, for these 2 now we're trading 3. And then from there, what do I get? I also get an ABC. I get this A, and then I get this B, and then I get this C. So after getting that C, now I get my 2. Okay, now I get my 2. So now this is something like this. Let me use the border one since we started with the border one there. So gentlemen, I'm not gonna during this session, I'm not gonna explain much what type of corrections are these ones, but I'll explain it on the other session, mentorship one, so that for the learning part. But this one we are just analyzing. We wanna see where we are going and what's happening, so that you guys you can see what we normally do. So let me just use the weeks. Sorry, right, something like that. So now I get my 1, 2, but this is 1 of 3, 2 of 3. Now I'm expecting 3 of 3. So meaning to say my 3 of 3, we are still going. You can see if I use my Fibonacci tool like this one, now it's in the zone. My targets they are way up there. The way up there. It might take about 4 to 5 years to reach there, but yeah, that's the main trend, gentlemen. This is the main trend. So the main trend is an uptrend here. Whether you like it or not, this is the main trend from the monthly. So now I go down to the weekly. This is what I'm seeing on the monthly. So what you do is you just you just plot whatever that you're seeing from each and every time frame using the exact principles of Elo 12s. Nothing more, nothing less. You don't add anything, you don't subtract anything, but you just use those principles as they are. I hope you are understanding me. So let's do this here. Since this one's for the small one, I don't want you guys to get this to this part. So now, since we are dealing with this part only, this is our main trend, right? It's fine like that. But we also deal with this inside one. So the inside one is join these two, 1, 2. There is that one, there is that 2 there. So that's the ABC that we're getting. So don't get lost. So the yellow one is the main one from the monthly, and then this one is the from this structure which was formed here. Just here. Okay. Let's go now to the weekly. So now I'm in the weekly time frame. So now, since we've already dealt with this part, I'm no longer focusing on the previous because I know this is the correction. So you can see my corrections are A, B, C. Give me this A, B, C. Give me this one. And then this one is 1, 2, 3, 4, 5. So this was a channel of A, B, C, D, A, B, C, D, E. Sorry, it's A, B, C, D, E. So it's like 1, 2, 3, 4, 5. So this is the inner channel, the inner channel. But since we have already dealt with this, okay, let me just show you guys so that you won't say that that guy just talks. So it's something like this. Let's change the colors. But the reason why I'm not actually focusing on this is because we have already, this is history, you know what I'm saying? So it's okay, it's okay for lessons, but at this point it's not right, it's nothing. So we put something like that. This is what we get. So this is the inner structure for us to get this C. So each and every leg was formed in a different way. So right. So now we are saying that we've got our ABC, then the market is broken up. But also, guys, you can see that even on our weekly, there are levels, there are key levels that the market respects. Now, even if it's an uptrend or whatever, there are levels that the market respects. So once again, you go back to what? To your line graph. And then now you are plotting the zones. So how do you plot the zone? Okay, this one is, of course, these two ones, of course, these two ones, of course. But now, from this point to that point, we average. We see that, okay, this is zone. Okay, that's the number 1 zone. And then number 2 zone. Okay. Which other zone are you seeing? I'm seeing this zone on average. So now you're plotting the zones. There's this zone that the market is respecting, right? So is the point and that point, right? So is this point and that point. So you can see that it actually averages. So it's this point, there's this point, there is this point here, and also here. So you see, it was actually respecting those areas. So then we go again, the inner one, we've got that point. There is that point, and actually this point, right? Right, you can see on average is this area, this area, this area, this area, and then area to expect. And then we go again. There is that area again. So on this one, for this area and this one, until we get to the top. So these are the zones that the market it will respect, no matter we like it or not. It will respect these areas. So that's how you plot these zones. You guys, you might call them supply and demand zones. These are the zones. That's how we get these zones. There's nothing magic. There's nothing fancy. You can name them, whatever names you give them, but this is how we do our price actioning. So, gentlemen, unfortunately, we are using Zoom, and our Zoom is actually not the premium one. So, what we're gonna do is I'll share another link. So, for those who are not in our free Telegram channel or WhatsApp, unfortunately, I don't know how you're gonna get the link, but the link is gonna be shared in the free Telegram channel in WhatsApp. The second one for second session. Please just join because now we're left with about 9 minutes, and then we do another session so that we just finish everything. And then you might have a trade to look at during the week or for quite a long time. Because whatever that I'm going to share with you, it's something that is going to be useful whenever you want to trade this pair. Okay, so make sure that you follow those social media platforms. So anyway, now you go back to your so you leave them those ones. So now, gentlemen, you are from what? Remember, this is 1 of 3, 2 of 3. Then you are trading 3 of 3. But remember also 3 of 3 is an impulsive wave, right? So what is happening now? The market. This one with noise. Huh? Can you please just reduce your volume or something? Now, again, now we say this whole part is for C. This C. We are done with this part. So now, where is our focus? Now our focus is on this part now. What is happening here? So now, as you can see, the market, what is it? What is happening here? Okay, let's go back to the line graph. There is this point and that point, right? This is the bold one. Okay, this is the structure that we're getting. And then what else are we getting here? So what are we getting here? We're getting that there is something like that. It's like a channel. It's like a channel, sort of like a channel. Okay, yeah, something like this. So this market is in a channel. Okay, and let's go back. This is the main one. So we have something like this. So in this channel, what is happening? You can see that there was an impulse and the correction. So let's check this leg. Where did it retrace? So now we are now trading, we are trading 3 of 3, right? Remember, this is 2. Again, but this 2 is 1 of 3, 2 of 3. We're trading 3 of 3 because we're in. Okay, you are from these two, gentlemen. We're from these two, don't forget. And then now we are going to 3, right? But we said inside that 3, there must be also 5 waves. So there's 1 of 3. This is the 2 of 3, right? Okay, so don't get lost. And then now in that 2 of 3, you can see also that we are trading another 3 until we get to the end. So this is what happens in the market. So we can see there was a type of, what type of correction is this? It came in the 50%. Okay, it wasn't that much. So you can see that it's actually valid. Why? Because there is a breakout of this channel. Remember this channel for C. This is our leg C. Our leg C. Okay, let's just put in. Find it. Let's see what happened here. But anyway, this is the C that we're talking about. This one, right? So the B and then the C. So my C, it ended here because this is the A, that's the B for C, that's the C for C, that's the D for C, and there's the E for this C to give me this complete C. Then there was an impulse, so that's a breakout and a retest. So breakout and retest is not magic. As if you are using Elliott waves, it's either the retest, it can be wave 2 or wave 4. There's nothing much, or it can be actually even wave B, sorry. So this breakout is giving us wave 2. But are you seeing something that for my wave 2? So I've got my A leg, B, and then the C. It's a structure like this. So this is my A. Okay, it's actually an uptrend. So it's something like this. I'll give you with reference, gentlemen. I won't lie to you. Okay, let me use an arrow here. Sorry, you said it's an uptrend, right? So it's something like this. And then my B, check what happened to my B. My B, it took out the high of A, right? It took out that high, so that's my X. And then it came in, but it never takes away the high of what? Of A. There is a correction like that. There is a correction like that. And then what happened? And then they went out. These guys, they went out. Yeah, they went out. So this is what is happening here. This is the type of a correction. So this arrow is representing this impulsive leg. And then this is my A leg. That's my A. Then my B leg, it took out this high. Again, but it never took away this low of A, because it's in what? It's an uptrend. So this is the type of a correction. So these are the kind of irregular flags. So we get there's supposed to be something like a 5-3 or 3-5-3. Sorry, 3-3-5 correction. But now you can see the structure here for C. Now this is more like mentorship now, guys. Now I'm spending more time on this explaining. I'm just supposed to analyze it. But anyway, it's fine. I don't mind. That's the breakout. So we have to understand all these things when we are analyzing. We don't just analyze. So it's not easy to just take a trade. That's why you see sometimes we don't just post on our channels, because we wait for our charts. Like we analyze these charts. You can see. I mean, we have all these charts. Like we have. I mean, like, so we wait. We see all these things, we did them a long time ago. So we just wait for them to fulfill the strategy or everything. So now we are here. So this is what I see. Now we've got 1, and then this is our 2. All of this is our 2. Then now we are trading 3. So our 3, as you can see, the market reached the target. Can you see that we reached the target for 3, almost there by the target? But now we'll, for this one, we'll deal with price action and see what was happening with the price action. What I'm saying, gentlemen, is remember, you just draw these Fibonacci 2. Don't get lost. You draw these Fibonacci 2. And when you draw this Fibonacci 2, right? Okay, let me label. It gives you the target. We said, remember the wave 3 target. These targets, these are your targets where you target. So if you are going to buy this market here, like as a swing trader, you are going to go out somewhere there. But remember, it doesn't mean that they have to reach exactly on the target. I heard someone was talking about the target. So you trail, you put after breaking this level. Some of us will take profits from TP1, because I know that from this level, after hitting this, there's a slight retracement, and then I'll buy the break above, and then I'll take my profit there. There's a retracement, and then I'll be aiming for the third one. But you see as we go down that why didn't they reach on this target? But they are in the zone. It's a zone. It's not a point. It's a zone. So they are in the zone. So they have fulfilled what your analysis.